I got a very interesting question from a viewer recently. He said, I'm paying my term insurance premium every year, sir, but how do I know my claim won't get rejected when my family actually needs it? How do I make sure? And honestly, that's a very real fear. Most people don't buy term insurance fearing this part. Buying term insurance is easy. The real test is what happens at the time of claim. So folks, in this video, let's answer this properly. What is claim rejection? Why does it happen? How to avoid it? And what can your nominee do if a claim gets rejected? Hello folks, I'm Shashank. You're watching Ditto Insurance. At Ditto, we help you compare term and health insurance plans with honest advice from IRDAI-certified advisors. No spam, no forceful selling, no upselling. If you want help choosing the right term plan or understanding your policy better, you can book a free consultation through the link in the description. Okay, first, before starting, let me tell you that there is a clear difference between claim rejection and claim repudiation. Life insurance claim rejection is usually due to a minor or technical issue, such as missing documents or processing error. These problems can often be fixed and the claim can be submitted again. On the other hand, repudiation is a serious and a final denial. It happens after a detailed investigation, usually due to fraud, the concealment of important information, or the claim not being covered by the policy. Now, you will be pleased to know that IRDAI has 3 clear regulations in place to protect you, that is the policy holder. 1. According to Section 45, after 3 years from the date of the policy issuance commencement of risk, revival or rider, the policy cannot be called into question. However, claims can still be rejected in case of proven fraud. 2. Insurers must settle claims within 15 days when no investigation is needed, and they get an additional 45 days if an investigation is required. 3. If insurers delay settlement beyond the timelines, they must pay interest at the bank rate plus 2% to the nominee. Now, what exactly is a term insurance claim rejection? Let's understand that. See, it simply means that when your nominee files a claim after your death, the insurer refuses to pay the sum assured. Now, it happens because the claim does not meet the conditions mentioned in the policy contract, and that's the key point to understand. Term insurance, at the end of the day, is a contract. If something goes against that contract, the insurer has the right to reject the claim. Now, the obvious question is, why does this happen in the first place? And for this, there are 4 major reasons. Let's understand that. The biggest one by far is non-disclosure or misrepresentation. This simply means that policyholder did not disclose some important information while buying the policy. This could be smoking habits, alcohol consumption, existing medical conditions, or even past surgeries. Sometimes people hide things intentionally to get a lower premium. Sometimes they genuinely think something is too minor to mention, but insurers look at this risk very seriously. If they find out during claim assessment that something important was withheld and not disclosed to them, the claim can be rejected. The second common reason is incorrect or incomplete information in the application form. This could be wrong income details, incorrect occupation, or even errors in personal information. Even small inconsistencies can create issues later, especially if they affect how the insurer assessed your risk. Third reason is policy lapse. If premiums are not paid on time, your policy will lapse. It's not active at the time of death, then there is no coverage. This sounds obvious, but it still happens more than you'd often expect. People miss payments, forget renewals, or assume auto debit is working when it actually isn't. Fourth is exclusions in the policy. Every term insurance plan has certain exclusions, especially in initial years. For example, death due to suicide within the first year is typically excluded. Similarly, deaths arising from illegal activities or high-risk situations may not be covered. If the cause of death falls under these exclusions, the claim may not be approved. Finally, there's early claim investigation. If the claim happens within the first 2 or 3 years of buying the policy, insurers actually tend to start an investigation, and they do it very thoroughly. This is not a bad thing. They just want to be on the clear side, but it means every death is scrutinized more closely, especially disclosures and medical history. Okay, now that we know why claims get rejected, let's move to the most important part. How do you actually avoid this? The first thing is, the rule is very simple. Please disclose every single thing. And I mean everything. If you smoke occasionally, mention it. If you had a minor surgery years ago, mention it. If you've even taken medication for something even once or twice, please mention it. It might increase your premium slightly, but it protects your claim completely. The second thing is to fill the personal form yourself. Yes, yourself. Don't rely entirely on an agent or someone else to fill it for you. Many claim issues happen because forms are filled incorrectly or incompletely. Always review every detail before submitting. The third is to choose a reliable insurer. This is easy. Look at things like claim settlement ratio, amount settlement ratio, complaint volume, and overall track record. A good insurer reduces friction at the time of claim. If you want to know which are the best term plans in the market in 2026, you can check out our definitive ranking video that we've made. I will link it here and also in the description for you to see. Now, the fourth is to keep your family informed. Your nominee should know that there is a term insurance that you've taken, where the documents are, and how to file a claim. And finally, keep your policy active, set reminders, track payments, and ensure that there are no lapses. Now, here is something that people rarely think about. What if a claim gets rejected for some reason? So, is that the end of the road? Not really. See, if you haven't gotten the policy through Ditto or in any aggregator, then make sure your nominee or someone from your family understands the next process, because you won't be around for this one. The first step is to understand the reason for rejection. Insurers are required to provide a clear explanation why they rejected it. Once they know the reason, the nominee can respond with additional documents or clarification if something was misunderstood. If the issue is not resolved, they can escalate it internally within the insurance company. Most insurers have grievance redressal systems where you can formally raise complaints. Now, if they're still not satisfied, they can approach the insurance ombudsman. Now, this is an independent authority that handles disputes between policyholders and insurers. It's designed to be accessible and doesn't require complex legal procedures. And beyond that, there's always the option of approaching IRDAI or even legal routes if necessary. Now, this is why having a trusted insurance buddy like Ditto makes things easier for your nominee, because we do all the heavy lifting when you're not around, from raising claims to helping provide documents and talking to the insurer and the ombudsman if necessary. So if you're still on the fence thinking if I should go through Ditto or anyone else, maybe try us out. Maybe this will ease your mind. Book your free call to secure your peace of mind with Ditto. The link is in the description. So the takeaway from this video is this: term insurance works exactly the way it's designed to work, but only if you set it up correctly. That's it from me, folks. I will see you in the next one. Until then, happy insurance hunting.